Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take another look here at Ethereum, see what's going on, help you understand best practice, big picture, and once again, happy Saturday to you and your family. What we're going to do before we take a look at Ethereum is just kind of get a big picture understanding of what's going on. I've covered this before. I just want to reiterate some key level support so you understand good dollar cost average targets to add to your position as the price comes down and continues down lower. It does feel and look like it's going to continue to do that. I think it'd be very naive and not ideal and disadvantageous to consider a long position right now. Not saying you should short, but at the very least, add to your position on the way down. Maybe just put in $20 a day or something, $20 a week, whatever you can afford to effectively average your price down. Because there is an inevitability of the fact that Bitcoin and Ethereum will recover. Ethereum's got such a large ecosystem, there's no reason for it not to, as well as Bitcoin, of course, being the largest and only true coin out there, you could say. So that being said, we'll take a look at that. If you're new to the channel, though, not a financial advisor, I really hope you can learn something here today. My goal is to help you become a better trader, of course, so if you can do that, my job is done. That's fantastic. I've had a lot of community members come and go over the last year, and it's been a fantastic experience, so feel free to join if you'd like. CryptoCache.tech is a website, link in the description below, where I just help you become a better trader with my academy, community, and signals that I send for the trades that I take, so you understand how to structure your trades effectively. Okay, they're not to be used arbitrarily, but they are to be used as a learning tool to help you get in the right mindset of how to structure your trades in these markets. Because it's a unique market that we're in right now. It's not very common for the price to continue to go down this much, at least not common for people to be used to it, rather, because it is something that you do get used to over the years. And after 15 years, 16 years now, I've learned a thing or two, and unfortunately, it's just one of those circumstances where you continue to learn from your mistakes. That's just the way it goes. It's more fortunate than unfortunate. Either way, that being said, taking a look here at Ethereum, here's what's going on. All the standard stuff, we're underneath 30 on the RSI. MACD is still diverging. We're seeing very similar behavior on Bitcoin. Only once again, Ethereum is 1.5x right now of Bitcoin. So I think we saw an 8% correction from Bitcoin from highest to lowest so far in the last 24 hours, and Ethereum somewhere in the 10 or 11% range. So, overall, in that sense, that's kind of what we're looking at for the moment. It's not good nor bad. It just kind of is what it is, and we just need to recognize the fact that it's just like with every single other altcoin, minus a couple of outliers. We are synonymous with Bitcoin, and Bitcoin is on its way down right now. Obviously, so big surprise. I think you know that, unless you've been living under a rock. And if you have been living under a rock, congratulations on the new world. Bitcoin's down 60% in 2 months. Awesome stuff, right? So again, you just kind of get used to it. I know I'm kind of being facetious here, but generally speaking, this is the way of the crypto market. If you don't like it, you probably are not in the right industry. And it's just kind of the way it goes. Extreme volatility in either direction. And right now, the direction is down. So taking a look at the 4 hour, we can kind of see here, of course, and big picture too. Also, we'll take a look at some of those support levels. I'll identify that in a minute. But I just want to kind of touch on this here, that the 50 and the 20-day SMA are effectively working as resistance levels. More so the 20. So until we can get back up above the 20, we don't have a leg to stand on. I'd rather be up over the 50, but that's still a push. Honestly, we'd want to be back up over the 200. So in truth, at the very best, we want to be back up over the 50-day SMA, but I don't think we're going to see that, because even though we saw that previously, it still didn't seem to matter, just continued lower. So in all reality, that doesn't matter too much. I would just say that getting back up over the 200 is the most appropriate, because the 200 is very synonymous in a lot of ways with the 50-day SMA on the monthly, in the daily. And in that regard, that's giving us that descending trend line. In fact, let me go ahead and just touch on that really quick so you understand what I'm talking about. This orange line here is essentially concurrent with this descending trend line, telling us that that is effectively a resistance level. Okay, so we're going to be stuck under that level for some time until the price can break back above. So, I mean, we're talking like, just say it comes back up like this, for example, that's still a month away at the very best before we break that trend line if we have a 20-30% increase, which I think is very unlikely at this point. Bitcoin going on a rally when the market is complete trash, not really ideal, because S&P, NASDAQ, all those traditional markets are down right now. So it's just something to kind of be mindful of. Let's go ahead and take a look at kind of some smaller time frames here and then call it a day. It's not really too much else we can disseminate except for the fact that we're below the cloud, and we've been so for quite some time. Okay, so until we can get back up over the cloud, really no point in taking entry. You're just kind of trying to catch that falling knife, as they like to say. And obviously, it's just one of those scenarios where you're better off waiting. So to me, dollar cost average, I personally have a $20 DCA every single day. I have it automated through Binance, where it just automatically, transfers money and puts $20 in there every single day. So, I feel comfortable with that because in time, as we continue to average down, once we hit the bottom, even when we're back on the way up, I'll still have a nice average price at a much lower point than my higher average price, and it'll help me out a lot, right? And that's generally the concept. Add to your position while you can, because, millionaires are made not in the first bull market, but the second bull market. And I've said this a few times before, but if you think about it, the first time you get in, you get wrecked and you don't want to get back in, right? That's kind of the normal thing. A lot of people are getting shaken out right now. The best thing you can do is learn from your mistakes and add to your position as the price comes lower, because once we have our next momentous trend, because once again, Ethereum will be back to, it will retest its all-time high if history repeats itself, which it commonly does. We will see, again, concurrent with Bitcoin's behavior, consistently increasing from there. In other words, we'll probably see that retested and broken in the inevitable near future, I would say within the next 2, 3, maybe even 4 years, just once again, because 4 years from now, we'll probably be at a higher price point. And I think between now and then, adding to your position is a good call. So again, that's just my recommendation. I could be way off, but I know that in most cases, I know for a fact, prior to this most previous 4-year cycle, I employed the same exact strategy, and it worked out very, very well. Okay, my average price is very low in the overall sense of things because I added to my position when the price was coming down. Just some friendly advice there. So let's go ahead and take a look at the support levels here so you understand what good dollar cost average targets are. And again, these are just previous support and resistance levels that I've drawn out that kind of just tell us where we're going to go next if we were to come down that far. So our first immediate DCA target is right in the 900 range. I would say 920, 930 would be appropriate. You could even say 950. Probably going to get filled soon, right? That's just kind of how the price is working right now. It's down to 990. We haven't seen single digits in how long? How many months has it been? Oh, I guess it's only been about a year and a half. But generally speaking, we haven't seen this low of a price point since January of last year. So it's been quite some time. And then furthermore, too, we also have right in the range of about 675. So you might want to say 680 or 690, maybe even 700 as a round number for the next DCA target. Because again, when you set your dollar cost average targets, what you're doing is you're setting a limit buy order at a specific price point for a certain dollar amount or percentage of your portfolio. So when you add to your position, essentially, you want to add to your position just above a key level support. So if our key level support is at 675, maybe 700 would be a good solid round number to shoot for, so you get filled in case the price wicks down and comes back up. Same scenario here as well. We're looking at right around 490, so 500 is an even number. So 500, 700, and right around 920. Some nice even round numbers to remember. 500, 700, 920. Those are 3 good dollar cost average targets here for Ethereum. Do I think it's going to go that low? At this point, I'm considering yes. I would say so just based on the fact that Bitcoin is effectively and has effectively lost its support level at 20,000. A close below that is typically disadvantageous. The price will probably come back up to retest that level, get rejected, and come back down. We don't have not any, but very, very little volume between 14,000 and 19,000, which implies we could very well see a free fall because there's a lot less liquidity and Bitcoin dominance is coming down. So if you've seen Bitcoin dominance, it is not looking good. Because again, all markets are red. Every single altcoin is red and the Bitcoin dominance is decreasing. Typically, Bitcoin dominance should increase when Bitcoin comes down because the money comes out of Bitcoin and goes into altcoins. That's the traditional sense. Now it's the inverse. Money's come away from traditional, just say, altcoins as well as Bitcoin. So all this money is leaving the market, and it's giving a very bad impression. It's leaving a very bad impression. It's not great at all because again, low liquidity causes these volatility moments where the price action decreases faster based on less people in the market. Okay, because again, it's just that supply and demand aspect of things, and it's a little crazy. So at this point, I would say Ethereum is more likely to go down than up. It may be a good consideration to consider like a short position with a potentially a longer term target. with those DCA targets I just mentioned. So your first profit target, if you want to keep it tight, would be somewhere in the range of 920. And then of course, continuing lower, right at about 700 and 500. So just some things to consider, of course. Not telling you to do that, but I am telling you though that dollar cost averaging is probably the best solution at this point, regardless of whatever you do. Because again, it's just a matter of time before it comes back up again. Ethereum and Bitcoin are not going anywhere anytime soon. Other altcoins perhaps, but this ecosystem is so large and so robust that there's no reason for it to go anywhere, right? Again, do your own research. That's the important thing. I've done my research on Ethereum and I feel comfortable investing in it. That's the bottom line. You do the same thing for yourself. All right, I hope you learned something here today, of course. If you want to learn something more, of course, become a better trader, CryptoCache.tech is a site, link in the description below. I look forward to working with you when you join the community. Just note that I have signals that kind of help you structure your trades so you know specifically what kind of trades I'm taking, how to structure them more effectively, but more importantly, a trading academy. I get a lot of new members right now just wanting to learn as much as they can in this downtime, and I respect that. It's the right time to do this, because if you can learn how to be a better trader in this market, you're going to be a phenomenal trader in a better market, more bullish type of market. Okay, it's just the bottom line. So I hope to see you soon. Hope you have a good rest of your day as well. Thanks again. Enjoy the rest of your weekend. We'll see you soon.